Good morning and welcome to the Real Estate Coffee Break, the mini podcast that provides a quick download of information while you're waiting for that first cup of coffee to brew. I'm your host, Colin Clayback, and today our guest is Jerry Fink, co-founder and managing partner at the Bascom Group, who since 1996 have completed over $21 billion in multifamily and commercial real estate transactions. That equates to 653 multifamily assets and a whopping 173,000 total units. Jerry, welcome to the Coffee Break.
Thank you, Colin, and thank you for having me on the show.
Yeah, awesome. Well, Jerry, I'm excited. You know, your group in the Bascom Group is a group that is synonymous with success in the multifamily industry. I think a lot of your peers and competitors look up to you, what you guys have been doing for the past 25 years or so. But it all started with 58 units. Isn't that right?
That's correct. Our first project was a $2.1 million acquisition in Ontario. It was a foreclosure by a local bank. And so, and prior to that, Dave Kim, Derek Chen, and I all met at the University of Wisconsin-Madison. We went through the real estate program together. We were classmates. We were friends in these classes. And after graduation, we all took different career paths. Dave Kim went to work for Disney Development Company. Derek Chen created a development company in Las Vegas. And I went to work at a company called Pacific Life Insurance Company in Newport Beach. And we all took different career paths. And, all started out as an analyst or some lower level position. Slowly started working ourselves up. And in the early 90s, the real estate markets had crashed. And they crashed nationally as well as California. And so after working 4 or 5 years at big companies, we all had this entrepreneurial itch to go do something entrepreneurial, like buy an apartment, fix it up. And so we had a very modest ambition, which was to buy 300 units over a couple of years, renovate them, sell them, make a nice little profit, and then go our separate ways. And obviously that was modest ambitions. It's grown way beyond what we ever probably dreamed of. And so the relationship has worked out well. And, we've been friends, roommates over the years. So, when you're working with each other, growing a business, it's like you're almost a married couple or a roommate. So, but the relationship's been a great one and been very successful too.
Yeah, well, that's awesome. I love to hear. Everybody sees it now, right? And it's, you're a big giant titan of industry.
Sure.
But it all started with, 3 friends at business school. That's great.
Sure.
When we started up Virtus, it was a couple guys in an office, and, now we're about 100 employees in offices across the country. So it's really cool to be a part of something like that.
Oh, definitely.
Yeah. Well, I know you guys have a national footprint, right? And, you guys have continued to evolve as over the past, 20, 25 years, right? Where would you say the biggest areas that you guys have had success, biggest footprints, and opportunities that you guys have had over the past couple years, year, 18 months or so?
Yeah. Got it. Well, I'd say we've always tried to be nimble and flexible, and we try to go where the opportunities are. And we originally started in Orange County, and we focused on Central and North Orange County, which was the older, more established neighborhoods where the buildings were built back in the 60s and 70s. And so, that was our first big push in the late 90s, was buying 1960s, 1970s value-add apartments in areas like Anaheim, Garden Grove. It worked out great. It was a great run. And then every couple of years, we'd look at different markets and we'd say, is Inland Empire the right time? And then we got to Phoenix at one point, bought a lot, and we sold our entire portfolio back in 2007. And, the market crashed in 2008. So a lot of these things are looking for the right opportunity, right place to go. And the most recent one really was Las Vegas. We thought Las Vegas could be a great opportunity because it was the hardest hit market in the last downturn. So coming off 2009 and 10, Las Vegas was probably hit the hardest of any city in the country. And so we got there about 2012 or 13, and went from 0 units to 10,000 units over a course of a couple of years. Thankfully, pre-pandemic, we sold 80% of it. So, it was a very fortunate place. So we try to find, where are the opportunities, what areas are distressed, and what areas will come back, and try to focus on those. And even today, we're scratching our heads saying, is suburban multifamily, overbought? I mean, are the cap rates too low? The price is too high? Maybe it's this higher density urban housing like New York, Chicago, San Francisco, LA. Those markets are hit hard because of the pandemic. And a lot of the capital is leaving those urban cities going to the suburbs. So we're always having to change our business plan, look for new areas of opportunity. And the goal is to kind of go where nobody, people are selling and then sell where people are buying. So that's kind of been our game plan.
Yeah, awesome. Well, you mentioned kind of what's happening, what's happened over the past year as we just hit the year anniversary of COVID. And it seems like all the, for the past year, most of these panels and conferences have all been online, but you kept hearing the same things: Sunbelt, Suburban, Garden Style, all of that, pro government, pro business governments, and things like that. You mentioned the exodus. Where do you see things evolving, in the most short term, in 21, and then maybe, 5 years down the road, what are you predicting?
Yeah, our prediction is, and it's crazy because 2-3 years ago, the urban core was the place to be. It was live, work, play. It was people don't want to live in the suburbs. They want to be in the urban, ring, downtown area. We can live, work, play. That was the buzzword. All the capital was flowing toward that. So if you said 2-3 years ago, suburban garden style, there wasn't a lot of interest in that. But urban high rise, everyone to do that. So the pandemic hits, and we've seen this major shift where rents have dropped in these urban core areas, the big kind of urban cities. New supply is hitting, so they've got supply growing while demand has gone negative. And meanwhile, the capital has said, oh, I want to be done with the urban core. I want to buy in the suburbs. So I'm going to Dallas or Tampa, or Orlando, or Austin, or Las Vegas, somewhere where I can buy garden style suburban buildings. And what they've done is they bid the cap rates from, low 5 to high 5, 6 cap rates to high 3, mid 4 cap rates for markets like Texas or Arizona or Florida or Atlanta. So we've seen this big shift in capital from the urban core to the suburban locations. And our prediction is, you're right, these suburban locations are going to have really strong rent growth this year, maybe next year, because they're pro-business, low state taxes, people are going there, there's job creation. But our view is there's also a lot of supply hitting those areas too. There's a ton of supply hitting Texas, Arizona, Florida. And I think a lot of this institutional capital will go there, buy a lot of buildings at super low cap rates, get okay rent growth for a year or two, and then supply will kind of overtake demand, and they'll suffer disappointing returns. Meanwhile, the urban core will rebound from the depths that's in today, and people will move back to the city. They'll like it there. They'll get bored being in the suburbs. And I think in 3 or 4 years, we'll see the shift from liking suburbs to being back to the urban core again. And so that's kind of our prediction will happen. We'll see if it plays out.
Yeah, we'll see. It's very interesting, and I tend to agree with you, but I guess only time will tell. I think that those big cities have been big and powerful for a long time, for a lot of reasons, and that certainly will come back. Well, Jerry, we are just about out of time. Thank you so much for the insight. I appreciate you taking the time for a coffee break with us, and look forward to seeing you out on the conference circuit and out in California. Thank you very much.
I'm looking forward to it too, and so thankful this pandemic looks like it's slowly ending here. So looking forward to going to a real conference, a real event, meeting people versus Zoom calls. So
couldn't agree more. Couldn't agree more. Well, thank you very much.
Great.
And again, thank you for being on the coffee break, which is powered by Virtus, our national real estate practice. Virtus Insurance Brokerage, headquartered out of Kansas City, that insures 350,000 multifamily units and 100 million square feet of commercial real estate. Thank you very much, Jerry.
Yep, thank you.